What's going on, everyone? Another bloodbath, and in today's video I want to explain to you guys what the next steps are for the stock market. We're going to go over the CPI data. We're going to talk about what's going on with the crypto market. But before I start and continue, I just want to explain that dollar cost averaging into the crypto market at the moment is a very good idea. I'm not your financial advisor. This is not financial advice, but longer term, if you believe that Bitcoin can hit $100,000, we are below 29 at the moment. If you think that Bitcoin can hit 100, you're basically getting a 3-to-1 that will continue going up. And that is a pretty good risk reward in terms of longer term. And also, I believe that the next 5 to 6 years for crypto are going to be the last major percentage gains that anyone would really make in this market before it becomes widely mainstream. If you're not certain or sure about anything else, just stick to Bitcoin. But please, I would definitely start dollar cost averaging into Bitcoin at these prices. Anyway, let's get started with the video. So CPI data came out this morning and it was bearish. So gasoline prices increased 43% over a year. Used cars, 22%. Gas, meat, fish, and eggs, new cars, electricity, food at home, food away from home. Overall CPI, apparel, shelter, everything is up. So now, pragmatically speaking, the Fed can curb a bit of the gasoline prices, right? They can curb gas and utilities, right? They can do some things to lower the prices of energy, and they could also do things to lower the prices of food. But it's not going to seep into, inflation at this time has affected basically the entire economy. And unfortunately, there's really not much that the Fed can do at the moment. It's really, it's actually very bad longer term. But oh well, here we are. This is the SPY. We can see that yesterday I was saying that we were in a zone between 395 to 405. We needed a close above 405 for a continuation to the upside, which I felt would be a bit of a bear market, or like a bounce, bear market rally sort of. But that did not happen. We ended up closing below our 395 support zone. Now, 390 on the SPY is going to be a very, very, very important level of support. There's not really much else to say in terms of that. So 390 is going to be a major level of support. I'm gonna look at the rest of the indices. I'm gonna take a look at the large tech stocks as well. We're also gonna take a look at Bitcoin, but this is pretty close to support, but the problem is that we closed below prior support, which was at 395. So 390 is going to be the next major level of support. And at this point, we're taking it one day at a time. Things still look completely bearish, but it's much easier and simpler to just buy puts and go short on pops upward instead of trying to catch bottoms, especially during a bear market. Especially when the market conditions are not in our favor, and especially when the Fed is not practicing a bunch of QE like they were for the past few years. So this is very, very important level of support that needs to hold 390. Then after we break 390, right, 387 is going to be the main level of support. But now, again, if we can close above 400 and then 405, that can give space for a bounce to at least 415 to even 420 potentially, for some short covering, for people to buy back into shorts and then fall down back again afterward. But there's a few things that I want to show you guys that is sort of an issue at the moment. Number one, Apple had a huge sell program. We ended up breaking. So first of all, this is down over 5% for the day. We ended up breaking down below 150 and coming back and retesting 145 almost. So this is a very, very bad setup for Apple. Yes, we technically did close very outside, overextended to the downside of the Bollinger Band, but just understanding that Apple has such a huge weight in the S&P 500, and the fact that Apple is showing this much weakness is a really, really bad sign for the stock market. And what's to come, really. This is not a good idea. This is not a good sign. Usually people use Apple as a metric to see how the overall stock market is doing. And this is very, very bearish. Also, just looking at the RSI is at 34.6. We're still not oversold on the RSI, even though we had a huge downward move, which is basically showing us that there is still more room to the downside. But yes, technically we did close outside of the lower Bollinger Band. We are about $3 away. Sure, we can, find some support, have an intraday bounce, but this is not a bullish sign. This RSI is showing that there's a lot more room to the downside. We could also take a look at Microsoft. Similar setup. Not as important in terms of weight, but Microsoft broke down the lows, broke down support, closed very overextended outside of the Bollinger Band. Yet the RSI has barely even crossed down lower. The RSI has yet to cross down below from where it was on May 9th, but we are $4 lower. So this is very, very bearish on Microsoft, very, very bearish on Apple. Not a good sign, but the only thing that could lead to a small bounce tomorrow is the fact that we are overextended to the downside on the Bollinger Bands. But then we have to see how we respond in the morning. And this is still not a sign to be bullish. Like overall, the market closed in such a bearish way. There's no sign to even think, oh my God, this is a good sign to buy. Like, you should not be looking to buy any dips. You should not be looking to try to catch any bottoms. You should not, unless they are completely overextended. But, and you know me, I love catching bottoms. But this is not a good time to do that, especially in a bear market. Even taking a look at Tesla today. Tesla is down 8% for the day. Inflation obviously doesn't help out phones. It doesn't help out Apple. It doesn't help out cars or Tesla, right? So obviously, this is not a good sign. And even after a huge drop like this as well, we're still not oversold on the RSI. And yet, we are at 730 support. But if this gives, we're seeing 692 because things are very thin between these levels. So tomorrow, we can have a really, really, really bad day. We can have a very, very... Tomorrow is setting up to be a very, very bad day. Yeah, honestly, if tomorrow we get a really, really strong flush down on the entire stock market, we might bounce on Friday. But this is setting up for maybe a small bounce into the morning and then a just violent drop tomorrow. So just be careful. This is just be really careful. Don't look to buy any bottoms or catch any knives tomorrow. So taking a look at the NASDAQ, we were down 3% for the day. The RSI still not broken down lower. Even though we crossed down and broke the lows on the stock price, the RSI has not fallen lower. And that is very, very bearish. We cracked a little, but this is not the same. So we were up here at 297. We're at 292 now, essentially. And the RSI fell on the lows here is at 33.13. Now it's at 32.42. So that was approximately a 0.7 drop, yet a 7-point drop in the actual stock price. So that's not good. Sorry, no, a 5-point drop in the actual stock price. So that is not good. 290 is going to be basically a major level of psychological support on the NASDAQ as well. 290 breaks, then same concept, 288, 287, and then this 284 level is going to be very, very important on the NASDAQ. We saw that the large tech stocks were very overextended algorithmically to the downside. We might have a bit of a bounce tomorrow to get more people, bullish in the early morning trading, but tomorrow can be a really, really, really bad day. And after a day like tomorrow, that's when we might have a bit of a bounce. So to get a strong, strong bounce, we need to have a violent move to the downside. Because there's still a lot of people that see more reward to the downside. Especially the fact that we closed down below 395 on the SPY. Especially the fact that we closed so poorly on Apple. We closed below 150. This is... just be careful. And here's the IWM. Again, we closed outside of the lower B band, but multiple days where we closed outside of the lower B band. Just purely closing outside is not enough for a bounce. It was, prior, but at these points, it's not enough to just try to catch a bounce. It's more profitable to scalp short at resistance instead of trying to buy and go long at support. What we did for the past 2 years, we have to unlearn it, and we have to basically flip it on its head. Whenever the market bounces and hits levels of resistance, especially during a bear market, this is a good time to go into shorts. Instead of, oh wow, we're at support, let me buy it. No, like, it's not as high of a risk, it's not as high of a probability trade to try to catch bottoms and buy at levels of support. So just keep that in mind. Just please try to drill this into your head, because the longer it takes you to understand this, the more money you're going to lose and the more money that you're going to leave on the table. Because if you had just understood and listened to me earlier, you would basically be making a lot more money. So just keep that in mind. IWM very overextended, but the good thing about the IWM now is that we are oversold on the RSI. Finally, we saw how disgusting the RSI looked. It was flat here, right? But now we can see that it is sharply falling, so which is a good sign. It's coinciding with the weakness in the stock price, as opposed to what the SPY and the NASDAQ are doing. They're not really showing that same weakness in the indicators as it was in the stock price. So yeah, overall the stock market looks really bad. 390 is a major level of support now on the SPY. We need a strong close above 400 to 405 really to see a bounce, a short-term bounce. But again, tomorrow 390 can end up breaking, and then 387 is a major level of support. Overall, the market is bearish. Please, like, just short levels of resistance. Do not try to go long. Do not try to catch any bottoms. There's that for the stock market. Now let's quickly take a look at the crypto markets as well. One Bitcoin is 29,000 United States dollars. Yesterday, we had a bit of a bounce in Bitcoin because we opened outside of the Bollinger Band and we bounced back inside, as I said would happen, right? But now what we're seeing is the lower Bollinger Band is starting to really, really fall much faster compared to the price of Bitcoin's falling. So today, after we close, I don't think that we will end up opening outside of the Bollinger Band once more. And the Bollinger Band will end up just continuing to fall, and the price of Bitcoin would end up trading within the Bollinger Band, which would signal more room to the downside before we end up becoming this overextended to the downside again, which would basically lead to another small bounce. But again, this is not a bullish setup, but it is important to realize that we are overextended to the downside on the Bollinger Band in general, right? The RSI is starting to show some sort of, signs of life here. And we are oversold on the RSI. So Bitcoin is really falling because of what's going on with Luna and the other stable coins and everything. But Bitcoin, the IWM, Apple, Microsoft, a lot of these stocks are extremely overextended to the downside. So just be careful. There could be a bit of a bounce, right? But it's not going to be anything substantial until we break above SPY 405. Every other thing that happens, every single time that we have some sort of a bounce, until SPY breaks above 405, those bounces at resistance should be shorted. All right. So there's that for the video. There's that for everything. I hope you guys enjoyed today's content. Make sure to like, comment, subscribe. Thank you so much for all of your support. I really appreciate it. And of course, I will see you guys tomorrow. Thank you.